Patron, take them away.
Okay, guys. Been a bit of a change for the 5%ers over the last few months and actually a couple of years since I've been trading with them. And what they've brought in is crypto, which, all right, I'm not big on crypto, but I can understand the attraction behind it. You can trade it on a weekend. You can trade it 24 hours a day, apart from a couple of hours on a Friday night. You do have decent movement within it, good movement. And the main thing is, it's the main ones. It's Ethereum and Bitcoin. Now, these are big players. So there's a decent amount of data in it. Let me kind of show you, and let's have a quick look at what they've done. So if I kind of pull this down, if you pull up your views, you'll see it's here. Now, if you can't find it here, go to view, go to symbols, and what you'll have is a list of what they have available. Now, as you can see, we have our Forex, which we know. We have our indices, which we know. And they've got a good amount of indices in there. Your precious metals, silver, gold. But now you've got crypto. Bitcoin, Ethereum. Excellent. Okay. But there's also another one. Energy. So what's this? It's oil. So of the two, you have Brent, New York, the London market, and then you've got the crude market, Western Texas oil. Of the two of them, that is the better of the two, the crude spot. Okay, this one here. But let's have a quick look at this. So from the symbols, I've dropped it into here so I can drop it onto this little box. And I just keep them close together, just like so. And why not? Because if you think of charts this way, a chart is just a chart. That's all it is. Okay. And if you remove your Bollinger Bands, I just use basic indicators, guys, RSI, Bollinger Bands, to read what a chart can do. You can start analyzing this thing. Now, what's the costs on these things? Well, if you open up an order, pull this down. If you're unfamiliar with the order system of MT5, it's actually quite simple. You have market execution, if you drop it in, and that'll go straight to market. And on the side here, you can kind of get a quick snapshot of what the spread is. Okay, you can see how far it is apart, or you can just do a quick calculation in your head here. 813 to 823, so it's about 10 points. Okay, another way is if you are looking on the side with Market Watch, you can come down here, select your columns, and you can actually click your spread in just there, and it'll tell you what the spread is. Okay, so you can have a look straight down and it'll tell you exactly what they are. So 971 points is just shy of 10 pips. Okay, so it all balances up. Nice and simple. How could you mark it up? Well, you mark it up exactly the same. Crypto is no different than Forex. If I was to take that name away and hide that time frame and tell you you're looking at a DAX chart, you could probably believe me, because a chart is a chart. So if we look at it now, this is the bit that interests me. One of the problems that I have with a lot of Bitcoin and all these other cryptos that everybody talks about. Oh, I'm looking for the whale. I'm looking for the next token. Are you? Really what you're doing is taking a punt, because there's no data in it. There's no historical data. Bitcoin has a lot of it now. Let's see. If we pull this back, you'll see this is going back 2013. So you've got a lot of historical data here. How does it respond to normal sort of trading conditions? Well, look at it. It's just a chart. It's no different. Come from here up to the top, just like so. Your key areas that you'll always be looking for is the pivot point, which is there. All right. So let me just change this and I'll just show you something, just so that we can kind of represent what's going on. So I'm going to put some monthlies in, and I'll put them in red, just so you can kind of see them. All right. Bear with me while I do this a second, guys. Okay. Right. That's a king fib. All right. It's a king fib. It's just a strong drive from 3 time sources. Okay. Now the guys in the squad will know what I mean by that. Now, if I'm coming down a frame weekly, flick this back, I can see a new fib. There's another one here that you can see. Why? It's a strong directional drive that goes into compression. Right. But it started there and it got down as far as here. Doesn't look a great deal at this moment in time, but bear with me a second. Right. Just drop these in. So that's 76.4, which is the true fib, by the way, because there is another version of it. But what you got to remember is fibs are ratios of a number sequence, and the number sequence here is a ratio going back to a golden number, and 76.4 is the exact polar opposite of 23.6, dividing up a set range between 100 and 0. So we'll use that, and then that comes into there. Okay, so I can now see where the top of that move started, which is here, and I can see its flat line, which is there. All right. This is about as simple as it gets, guys. It really is. But it looks messy. And you're thinking, holy crap, how would I trade this? This is horrendous. You may be right. Look at it daily. Let's pull this back, see what the last data sample is. This here, it's in motion. You can't do anything with it. Where was the last move? Well, there was the last move here. It's a strong, sustained move. Then the price has been pretty much contained in it. It's broke out at the top. So again, move started there and went this way. But this one we're going to put extensions in. So if I just change the dynamic of this, down, drop that onto there, this onto there, that onto there. Because if you can draw these things in correct, half your battle's won. There is a distinct way that I draw things in, but I'm giving you a quick snapshot of what a chart is capable of operating on. Okay. Right. What we've done here, or what we are attempting to do, is create and find key bouncing points. Just like so. There we go. So there is Bitcoin in all its glory. High time frame mapped. Now if I drop this into an hourly so that I can see what's going on, well, suddenly these fibs are showing not only key bounce points but compression. Straight down the fib, straight back to the fib. Through the fib, compression, back down. Across, compression, back down. From the fib to the fib. When it breaks through, round, 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 stall, compression, back up, through, all the way along it, boom, 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 boom. Now you add other elements into this, like golden eye and one thing and another that I use, solid support and resistance. Suddenly these fibs become very powerful. To the pip, straight down, stalled, to the pip, boom, 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 boom. From the pip to the pip. And I did this rough, boom, boom, down, stop, down. If I drop this into a 15-minute chart, this is even nicer. Look how nice this is. Tell me that you can't trade this. So are you really frightened of crypto and what it can do? Makes you wonder, doesn't it? Scroll this out a little bit just so you can kind of see it. Right, pull that down. Look at the arenas. If you've got too many levels on, you can start panicking. But you trade from an hourly chart and you know that you're having a break of here and it's pushing up. Look at all the space you've got to work in. But if you've got level after level after level, it goes mental. It's why 5-minute charts, 1-minute chart markups, they become very messy. But if you look at this on an hourly chart, which is where the information comes from, it now looks really clean. And you can see what a market is trying to achieve all the time. Simple stuff, guys. So in summary, what you've got now is not only have you got the 5%ers where you can trade your normal Forex indices. I will touch on the indices. Indices costs overnight are expensive. So be very careful of that. But as long as you know, then it's not a problem. You know an indices is a day trade. You know Swissy. In fact, you can see whether you're on a positive or a negative swap as well if you're looking at a chart. Let me flick this back. I'll show you how to do it. Go to said symbols. Okay. Pick out whatever it is. Australian dollar versus the New Zealand, because it just happened to be the first one that was there. Scroll this down. And it'll tell you what what the margins are, etc. It'll tell you all of the information you need to know about the executions, what the minimum volumes are, etc., etc., etc. And then it'll come down to your swaps. Now, if that's a minus number and you're going long, you're paying the swap. If it's, in this case, if you're going short, you will be paid the swap. So you can actually be paid for holding a trade. So that can help you. And then under here, it'll start telling you what the rates are. So you actually know what the cost is before you go to it. Simple stuff. Simple stuff. Trading is all about homework. Everything we do is homework. So if you're going into an asset, you're going long, you know it's going long, look at your swap. If it's positive and you're getting paid, hold it for 24, 48 hours, whatever. If it's not going up to plan, no problem. If it's negative, work out what the cost is, because it'll tell you what the rate of exchange is and how much that's going to cost, as I've just shown you. If that's more than what you're willing to get out of it, isn't it better just to kill the trade-off? Because you're going to get charged it anyway. Just a thought. And then just apply yourself correctly. So in essence, I think the fivers have done really well here in introducing new assets. And it kind of shows that they're trying to push things forward. And if you want to try it, there is a link for them down below, because I do use them personally. And you will get 5% off because they were kind enough to give it to me when I was the guest speaker at the conference. And I just give it back to you guys. So there we are. Well done. Happy days. So as always, guys, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.